All right, so let's do part 3. Okay, this is part 3. We're on gold. Now, part 1, we did the analysis. Part 2, I did a trade that went pear-shaped. Part 3, we said if we come back down into 2037.5 and the price at 4,025, if you recall, in part 1, at a trade hour, Now that trade hour isn't in CycleEdge, which I said it's not in CycleEdge, but it is in the members areas overall hours. All right, so we're following CycleEdge as well, and we're following this one, but this is going to be mostly CycleEdge. All right, but there are some things CycleEdge cannot calculate. So as you can see here, we've got 540, which I also have. It has 715, which I also have, but it doesn't have everything. Okay, so I don't have 715, but I got the 540, which it should also have. Here we are. All right, so this is why we have to like kind of use both of them and see how we go. All right, and that's how it is. So we're expecting volatility until 540, right? Volatile until 540. So two things can happen here. We're either going to come back up here and they're going to sell off, okay, which is going to tick me off, or we're going to go up and we're going to start to break up and we're going to continue from the trade day of Thursday, Friday, and push to the upside. As you can see, I've got 2 open positions here already. All right, so we're testing that out, so we'll see how that pans out. Okay, but if it goes pear-shaped again, I've got a tight stop loss, all right, which is just below. That's where the entry is at the trade hour. Okay, and that's the low that it did, and we had a 4,025 according to CycleEdge. Remember, that's where we bounced off, so we're okay with that. Okay, it's fine. This, I've done a post-mortem on it, and obviously we should have bought when the market came back down instead of anticipating a breakout. Okay, so I've done a post-mortem. Talking about a post-mortem, what I've done is in the 5-step protocol there was an error here. I fixed that, so in the members area there's a updated one without the bug. All right, so what I'm doing is I'm also taking the taking what's on the protocol and then copy pasting it onto a Word document. So there's a list of all the trades, what happened, what went wrong, what we could have done better. So those things we have to note down, right? But without a journal, because you don't know what's going on. All right, so that's how it is. Now, normally what I do is when I enter a trade, the first one covers the stop. As you can see, the stop is really close. Okay, and that is like way out there. That's like 1 to 4 or 5. All right, risk to return, and then the other one is even more. All right, so it's because it's all the way up at 4,170. Okay, but if things go pear-shaped here and the market comes here, and then because that's a trade hour, they started push it to the downside, I'm just going to close it with minimal profit, and we're going to wait for another setup tomorrow. Why? Because CycleEdge said, okay, in the weekly we can take a look at both Monday and Tuesday. All right, so from Monday and Tuesday we're going to find lows to go to the upside. All right, and follow it into July 3. Okay, and that's the whole idea. So that's why if things go pear-shaped, like, okay, you know, had a bad day, but tomorrow I'll be also looking for a setup on tomorrow's hours as well. All right, so we'll follow that through. So this is part 3, and we'll see how gold goes. If our bias is correct and we go to the upside, I've got a price 4,250, but the second take profit I'll put at 4,170. That's if it goes in our direction. If not, obviously we're only one bar away from entry for being stopped out, so we'll see how that pans out. But you can see how the risk is very low. And in the first one as well, I should have done a 1 bar stop loss. The reason I didn't do that, I wanted to test CycleEdge's pricing. The pricing was actually good because this was also CycleEdge pricing, that 4,025, which sits right on the 37.5. So that was also good. So I should have actually done that in the first one as well. So noting those in a post-mortem is a good way to, good way to keep a track of what you're doing. So now that there are things we're doing wrong, we're going to amend them and not do them again. Okay. All right. So this is part 3. We're just going to see how this thing pans out. Like I said, if the market does something crazy and follow this down, then I'll just get out. In any case, though, like I said, it's only a 1 bar stop loss.